All right. Hello, everyone. My name is Abby Nelson, and I am here with Michael Smalley. If you want to share a little bit about who you are.
Hey, Abby, yeah, thanks for having me. So I'm a lender with Waterstone Mortgage, and we've worked together for many years now and done lots of closings, easy, hard, and all in the middle. So excited to jump on today and talk about what's happening in the market, both in my world and your world.
Yeah, no, none of them are hard ever, Mike. Come on now.
Yeah, the ones that you think are going to be easy actually wind up being the hard ones. It always
Yep.
kind of throws a little curveball at us.
Always Murphy's Law. Murphy's Law. Well, I wanted to start off asking you, what are you seeing on the lending side of things right now?
Yeah, so when we talked last, I think we did one of these maybe 45-ish days ago, kind of like 2 weeks into COVID maybe.
Yeah.
And we talked about how things were tightening up and kind of the reasons behind that. And I think the good news is not long after that, things kind of stopped getting harder from a mortgage standpoint. And in the last 2-3 weeks, it seems like things are starting to get a little bit easier. And I don't want people to think that easy means like we're going to be 2006 again with like loose underwriting guidelines.
Right.
But getting back to what it was like pre-COVID, which I think was probably the right balance of, people could get mortgages, but you still had to document your income and, qualify and whatnot. So yeah, we've got some good news to share that things seem to be getting somewhat back on track.
Nice, nice. So loosening up. I know the other day we were talking about how for those that have been furloughed, what happens when they do get back to work? Like, how long does the lender have to wait for pay stubs, or what?
Right.
What were you telling me the other day?
Yeah, so I have a client that works in retail at a big national retailer that you would recognize at Disney Springs, and this person was working during the shutdown, kind of like reduced hours, kind of using up PTO, wasn't going into the store because they weren't open, so was getting paid but not really getting paid normal income.
Right.
So we wouldn't have been able to use that income had they been closing in May, but they closed June 1st. They went back to week. I think Disney Springs opened. I looked at my calendar. I think the 27th of May was a Wednesday, and I think that's the day they went back to work. And we got a employment verification from the employer, HR, basically saying they're back to work. And we didn't have to wait 2 weeks or 4 weeks or a month or wait for pay stubs or anything like that. We closed 3 days later. So
wow.
That's kind of what we thought would happen, but we've just kind of started seeing people getting back to work and now trying to close. And it seems like in most cases, people getting back to work, once we can verify it, they're back to work, they're getting paid, then, I think it's kind of, basically they're right back on track. They're not being penalized for the gap. It's kind of like if someone took maternity leave and you had a child and you were out for 90 days, the day you get back, you just kind of jump back in where you left off. And there were lawsuits years ago, lenders got sued for discriminating against women's income if they took maternity leave. And Fannie Mae and Freddie Mac had to adjust to that and basically rewrite the rules, which said that if someone's on maternity leave, and actually goes for men now too, for like it's more house, family leave. If you have family leave, you can't be penalized for that. So that's kind of how we thought it would play out, and we're kind of happy that seems to be how it is playing out, that once they're back, it's like the gap didn't exist to a degree.
So it's literally like a pause button and release the pause button, and everything
Right.
kind of continues to move forward.
Right. Yeah. As long as they go back to work and the income is,
Sure.
back to where it was. Yeah, we're still having some challenges with people who are self-employed because Fannie Mae and Freddie Mac came out with some new guidelines that go into effect next Thursday, the 11th of June, on how we're supposed to treat people who are self-employed, who maybe, had a reduction in income. Maybe they were closed if they were a restaurant or something for a while.
Right.
And how do we calculate their income if they're back to work? So that's going to be a little bit complicated. But your traditional employee, it's a little bit going to be a little easier than we were expecting, which is good.
That's good. We love good news these days, right?
We need something that's easier, right? Everything's been harder for the last 2 months, so anything that's easier it makes us smile.
Has it only been 2 months, Mike?
So I have a new people hopefully will laugh at my comedy. So I have a new way of counting time. So today is day 105. And it's week 10, day 5. That's my new time measurements. So On Monday is 111, which is week 11, day 1.
There you go.
So hopefully we go back to 0 and just go back to calling it June 5th or 10th or 20th or whatever.
I haven't always forget what day it is, but
yeah.
well, good. Well, we're seeing, some things on our end as well with, inventory. It's been really interesting, and I've been trying out some updates on what's going on in our world. But we're definitely seeing things continuing to just move right along, heat up, lots of multiple offers. And I really think the reason why is, and I'm actually going to work on sharing my screen on this one. I'm really picking up some tech tips lately. But if you look at our market pulse, you can see that, it's all about inventory, supply and demand. And when the new listings in April, and the data is about 45 days behind, usually this month in April, we are at 4,200 homes coming on the market. Last year was the same. So this was 2 years ago, this was last year. And what's really interesting is this past April, we only had 2,800 homes coming on the market. And if you look at the contracts, so basically supply, demand, right? So the supply dropped, and the new contracts, 2 years ago we had 3,700, last year 3,900. If everything was moving along like our January, February, and March started off, I would expect us to almost be over 4,000, and we're under 2,200. So the amount of differences that we're seeing is not that drastic. So our supply and our demand have stayed equal. The pie has just shrunk. So that's why I think we haven't, really seen any devaluation, at least not yet. Who knows what the future will continue to hold and play out. But right now, the competition, it's just fewer homes. And I think the buyers are starting to come back first. So, and have you seen the applications increase?
That's exactly what I was going to ask you, because it feels like the buyers have come back faster than the sellers. And because of that, it's gotten even more competitive because the sellers have kind of trickled in at a slower pace.
Yeah, so those are new contracts, but a new listing comes on. But if our buyer pool has all of a sudden increased all of a sudden, and the sellers are still, thinking about it, getting their houses ready or whatever, then we have even a shortage of inventory and more buyers, which is just continuing the, supply and demand being really tight, at least in our Central Florida market here.
Well, it makes sense because if I'm a buyer post-COVID, it's not that difficult. I can go look for houses safely. I can wear a mask if it makes me comfortable. I can do the virtual showings. But if I'm going to sell my house post-COVID, then I have to think about all the other considerations of, people coming into my house and cleaning and whatever that looks like. So, it, kind of makes sense when you think about it. And when we talked last time too, you mentioned home values. So I know when we talked, we both agreed that unemployment was the factor that we really had to watch. And if kind of some of the stopgaps, the, stimulus packages and whatnot could kind of cover the gap while some people were out of work or working less, that we thought home values would remain strong. And so today's the first Friday of the month, which today's jobs report day. And there were 2 million plus jobs created last month in May, which created this kind of a misleading, because it just, it's new jobs, those are people that lost their job, were laid off so they could file for unemployment, and then are probably mostly getting their jobs back. It's probably getting rehired. But 2 million people have gone back to work, and that's in May, where over half the country in May was still on lockdown. So I was really surprised, and the market was surprised by how big that number was, which I think that's a really good sign, because in June, when most of the country is back, even if it's easing back in, opening businesses back up, if that's another big number, 3-4 million people who might have been laid off or going back, that gets unemployment maybe back under 10%, which is a really good sign. A lot of the economists that I've seen have kind of said you might have a really fast rebound like that. So like if 10 is where we were and we drop to 5, they're saying like we may get to 8.5 really quick, but then it might take 6 more months or even longer to get all the way back. Like a quick rebound. Yeah, but we're not going to go to the peak of where we were. It's going to take some time to get back there. But hey, I mean, anything helps, right? You know,
right?
from where it was, you know, where we were 45 days ago.
Yeah, and it'll be interesting. I mean, I'm from other agents that I've been speaking to, and just some of the numbers they're putting up as well. It's almost like our April, May, June might turn into our June, July, and August, and our season just
Yeah.
might be a little shifted. So it'll be interesting. You know, I'll never go into politics, but it'll be interesting to see what happens as we continue to get closer to the election time frame. You know, usually it kind of pulls back and people wait to see what happens. But with everything from, you know, being on hold for so long, I'll be curious to see if it stays a little bit stronger longer.
Mm-hmm. Yeah, I remember before the last election 4 years ago, it seemed like end of July is when some people are like, I'm just going to kind of sit tight and see what happens with the election. Not that I don't think either you or I think that that really makes as big of a difference as some people might think. But, you know, people kind of pull back. Yeah, I think maybe that pullback is September of this year.
Yeah, I mean, but that's historically what happens. And that was the advice I was giving my sellers, you know, before all this. I said, listen, I think we're going to have a really strong summer as we get closer, you know, in that August, and when we usually start to fall off, we're probably going to definitely fall off or just be on the sidelines a little bit. But now I don't know if that'll hold true. We might stay stronger. So time will always tell. We'll always know when we're looking back at it.
So I'm guessing that the advice you're giving to sellers is if you're serious about selling, it's to do it now.
Yeah,
right?
for sure.
While there's not a lot of inventory.
Interest rates are low. The buyers are chomping at the bit, and we've been getting. I mean, the Bitmojis that are being, or not Bitmojis, but the images sent back and forth from my team were drowning in offers this morning, just because literally we put a few homes on the market on Wednesday. That's what we always do, and just have a handful of them. Bidding wars are ready, and try to carry those bidding wars throughout the weekend and get the most for our sellers. But it makes it very tough when we represent the buyer side, you know. So when it's good for one market, it's not as good for the other. So, you know, when someone always asks me, hey, how's the market doing? I'm like, are you a buyer or a seller? You know, which are you? So right now for the sellers, it's competitive. It's been moving pretty well.
Well, I remember in other really low inventory markets, because this happened with our client over the weekend, where they made an offer and the seller said, hey, we're going to wait a few more days. You know, normally before this, they might respond to your offer and negotiate on that offer. But, you know, I was kind of surprised when they said, we're going to wait a couple of days and see what else comes in. And then sure enough, they get more offers. Kind of reminds me of like post-crash, like 2012, when we were coming out of the last big crash and you had foreclosures and low inventory. The banks would kind of sit on offers for like a week and see all the offers that came in. And then they would pick whatever they felt like was the best.
Yeah, I mean, listen, I'm going to do that strategy with my sellers as well. Try to buy as much time, more opportunities, more offers, more people that can see it. And so we will, you know, not intentionally stall, but try to stall if we can. It depends on how the offer is structured. And that's what's, you know, important is working with seasoned agent, because there are many different ways that you can structure an offer, I feel, to make it more competitive. And you know, for my buyer, it's always what does the buyer want to do, but at least I'm able to explain a few different options for them rather than just, you know, most just agents present the offer and hope for the best. And I think there are lots of different strategies you can take to get your offer, you know, ahead of others. So there are lots of nuances to every scenario that we take to give our clients the best advantage. So when I don't get one of my clients under contract, I really, I take it personally. I'm like, where did I do wrong for them? But
yeah, what could we have done differently? Yeah,
in this case, like we did everything the way that I coached them on some other options that they could have done. I don't know that it would have mattered. We'll never know in hindsight. But there are definitely a few different strategies that I guide my buyers through to some of it depends on how bad they want the house. And if it's one that they're like, I can't lose this house, then I'm just going to give them all of my tools and techniques. And it's up to them if they want to use them or not.
Yeah. So would that be like escalation clauses? Have you seen things like that starting to come back a little bit?
Absolutely. I mean, we used an escalation clause in this one. And even escalation clause, like I'm so detail oriented that I'll even nitpick those. I've never seen an escalation clause with one of the extra little tricks that we do. Our escalation clause, well, actually has two things in it differently than what most escalation clauses I get have. So an escalation clause, for those that don't know, is it basically makes it like eBay bidding. Like you're able to say, hey, here's my offer, but if someone else comes in with a better offer, mine's going to bump up, but only to this amount, okay? And the other agent has to present the offer to show why ours bumped up. If it did, doesn't always. You know, people sometimes think that, well, if they see this, it's going to go up to that much. And it actually very rarely happens where it escalates to the highest amount. But escalation clause is one tactic, but within our escalation clause, I have something added that I think is very important, where we'll put that it has to beat out the highest net offer, right? So I think sometimes agents say, okay, here's an offer at, let's just say 200, and here's another offer at 200, ours is going to escalate over, but this one's asking for 3% in closing costs. So their offer really wasn't 200. And so don't just ask for that first page of the contract, because you might not see the whole picture of the offer. So that's something that I find really important to articulate in the escalation, that it says it has to be higher than the net offer, not just the offer, okay? Oh, you're on mute, Mike.
Okay, we good?
I'm good, yeah.
Okay. Yeah, that's a good point, because I've never thought of that as far as the net offer, but that makes a lot of sense, because a lot of times the price goes up to get more of seller credit in the net.
So these are, I'm sharing some of my tricks and how I negotiate here to the world now, but that's one of the things that I find important in an escalation addendum.
Right.
And then also, you know, I tell my clients, and again, it's always, what does the client want to do? How does the client want to present their offer? I'm just here to give them all the options, right? So I also say, hey, listen, if we escalate, we're only $1,000 over a cash offer, that's not going to look as strong as if we're $1,000 over another offer that has financing like ours. Mm-hmm. So I say, hey, let's do $1,000 over any other financed offer, net offer, but maybe we do $3,000 over any cash offer. Okay. So just making it a little bit sweeter for the seller to give our buyers a better chance. So another strategy that whenever I've received an escalation, I've never seen an agent have those terms in there, but these are some of the things that we put in ours to give our buyers a better advantage. You're very familiar with one of the strategies is definitely, you know, first and foremost, making sure you're working with a great lender. And then when you present the offer, copying the lender, not just sending the pre-approval letter, which obviously is very important, but copying the lender so you can chime in and you can show that you're communicative, because that to me is one of the biggest hurdles I have in my career is communication amongst agents and lenders. And so when right from the start, we're saying you're able to chime in and say, hey, these buyers are great, I have all their docs, and you're able to even add on to the pre-approval letter. I feel it gives the warm and fuzzies. We also, you know, our surprisers didn't get accepted because we wrote this heartwarming letter, the clients did, and they took pictures of their twin sons. And she even wrote that. She's like, you're tugging at my hearts here. And I'm like, yeah, that's the point. So just to, you know, give the buyer every advantage is just when I'm representing the buyer, it's what we're supposed to do.
Well, and you never know what the seller's motivation is. Like, I've had buyers get offers accepted when they were not the highest offer. I've seen it when they're a veteran and the seller was excited that they had a feeling, oh, I want to sell my house to a veteran. I've seen ones where people wrote the letter about, you know, my grandmother grew up in this neighborhood and I'm moving back here. And the seller really loved the neighborhood and wanted someone who cared about the neighborhood. So, and then other sellers were like, I could care less about any of that stuff. I want the highest price and I care less. Don't even worry about telling me your family story. Like, every seller's different. So it's, you know, you kind of use all the tools you have, and then hopefully one of those resonates with the seller, you know, whether it's the offer price, the speed close, or the emotional, you know, family stuff. You never know what the seller's gonna relate to.
I had one, I was going to use it as a very similar example. I had a client one time, and our offer, actually, she told me, I don't always find out why I didn't win, you know, why I didn't get our buyer's offer accepted. I always ask, but I don't always get the response. And one agent said, she said, listen, your offer was so much stronger, so much better, just better written. That's something that as a listing agent, I definitely look out for. But she said the other person was a veteran, so they didn't care that they were giving up funds. That was more important to them. And so, yeah, I think the heartfelt letter from the buyer can be very, very helpful tactic. But yeah, having an agent that writes the offer the right way. You would think that's something so simple, but I can't tell you how many times the first page shows that it appears to be a cash offer. We get all excited, and then we go to the second page and the financing box is checked, but they didn't do the calculations right on the first page. And so it's
red flag for the listing agent, right? If you're the listing agent and you have two offers, you're going to tell your sellers like, hey, seller, this buyer's realtor is not very prepared and organized. They don't look like they know what they're doing, which is a red flag that deal is going to have problems.
100%. I mean, we sometimes have some that are literally apples to apples, and that's the difference, is because, well, they're exactly the same offers. The lenders have given everything else the same, and this one, the agent didn't know what they were doing, and this one, the agent did. So here's what's going on, seller. Which one do you prefer for us to work with? And so for me, it makes a real big difference.
Yeah, when we see that all the time, I mean, just things that just are not like properly filled out. Seller's name, owner of record, rather than having the seller's name, like little things like that in some cases make a difference.
Yeah. Well, sometimes it's not in the public records because they're hidden. So if we can't get a hold of the listing agent, I'll defend myself on that because I've had to use owner of record every now and then. But if I can't get a hold of the listing agent and I don't know what to write and it's not in public records, but that happens so infrequently.
Yeah.
Just some of the tricks that we use. I mean, there are lots of things that we do to try to guide our clients. On the buying side, there are different strategies. So the escalatory addendum is one strategy. I remember one time, actually, she was a former coworker of mine, and I helped them buy a house. And we knew that this was in a different market, but I loved the strategy. There was a house that was put on the market, and it was way undervalued. Like it was too good of a deal, right? And I knew that they were just slammed with showing after ours. I mean, we saw the cars driving up around us, and I think we were the very first showing. So I told her, listen, speed is the name of the game in this one. And so we literally pulled up my tablet, wrote the offer, had them sign it right then and there. And I told the agent that it was 3 o'clock. I told the agent, I said, listen, and we gave an offer above list price. So it was everything they wanted plus a good bit more because I knew the value was even higher than that. So I told the agent, I said, all right, here's the deal. I'm sending over right now a very, very, very strong offer. But we need a response by 5 o'clock. Otherwise, our offer is going to change and it might not be this strong. And that fear, like it gave my clients the upper hand in their negotiating. And so I was able to create that fear of losing out for the seller when they totally had the upper hand in that one. I mean, they had priced so low, they were going to get multiple offers, but I didn't want them to get into a multiple offer situation.
You wanted to get it under contract before that.
Mm-hmm. So he called me back and he's like, my client's in Japan. I can't get it. The time zone there. I was like, I don't care what you got to do. I need a response by 5. And it was awesome. I talk about that one because they made it happen, got it under contract. So that's also a strategy. But the buyer has to feel very comfortable knowing that they're paying above list price. They weren't paying above market value, but
there's a big difference between the two of those.
Right, there is. And sometimes that perception of, but this is what it's listed at.
Yeah.
I get what it's listed at, but it's going to sell for a good bit higher if the agent works it right.
Hey, I can list at $200,000 our house for $400,000, and you can get it under contract for $300,000, and you're not getting a good deal. You know, so yeah, I tell buyers, especially first-time home buyers, that a lot. That just because you get it under listing price doesn't mean you got a good deal, and just because you pay over listing price doesn't mean you got a bad deal.
Right.
It just means that it wasn't listed appropriately to begin with. It was either too high or too low.
Well, it could have been listed appropriately, and maybe that was their strategy, right?
Well, yeah, I mean, it wasn't listed at the market value. Yeah, they might have listed it low to try to get multiple offers, or they might have listed it high, to see if someone would pay over market. And then when they didn't, they kind of sold it for what they knew their number was.
Yeah, which, I mean, definitely strategies we've had to take for, every seller has different circumstances, and so you have to price it not just according to the market, but according to what they need to accomplish with that.
Yeah.
So.
Well, it seems like right now, with things selling fast for buyers, we're kind of in a ready, fire, aim market. Like, I saw a house, I like it, I gotta, fire, get it under contract, then kind of deep breath, pump the brakes. Okay, let's get my inspection. A lot of buyers I find are nervous to make an offer quickly until, especially first-time home buyers. Well, I want my mom and dad to see it. I want my uncle who's a handyman to see it. And they don't make an offer because they want to have people kind of validate their decision that they're doing the right thing by making an offer. And when they wait, it's gone. So I always tell buyers, hey, if you like it, make an offer, right? If you get cold feet, you can always cancel. If you have a good realtor, they know the contingencies. Not that you're making an offer with the intent to cancel, but you're not married to this house for the rest of your life by making an offer. You're just getting the process started.
Yeah, and I've noticed that, it happens a little bit more so with first-time home buyers, that sometimes, they have to miss out on an opportunity for that to, to really sink in, and for them to feel comfortable that, that is what the market is doing.
Yeah. Well, the first house, I'm sure, the first house Jacqueline and I bought in 2003, it took 5 offers. It was the 5th house we made an offer on was the one we got. And when we were a little slow, funny things, like I came from working out wearing shorts and a t-shirt, and we were young, and the sellers were there and looked at us and were like, I don't think they qualify. And they didn't know that I do mortgages for a living. So I wouldn't be there if I didn't know I could get approved. But, one, I didn't pass the eyeball test, so we were like, okay, next time we're going to shower up and, we don't have to be wearing a suit, but, put a polo shirt or something on, look presentable. And, one was multiple offers. The house we bought, we actually paid over asking price, and we got a good deal. It's just, we bought a FSBO, and which is a whole nother topic, but, they
we'll save that for another day.
They weren't listed as high as they should have been because they didn't have a realtor. So they kind of undervalued what they could have got out of that house because they did a really nice job kind of renovating this little Winter Park bungalow that we bought. And so we paid like $2,000 over listing price and probably got a decent deal. Fair, certainly fair,
Yeah. Oh, we can go on forever, Mike. I think we can always
war stories.
chat forever, strategize, share our war stories and things like that in the real estate market. But I thank you once again, for your time, as always, for your knowledge. I mean, you have helped us in so many circumstances and just giving us great advice to pass along, even when it's not a transaction that you're involved in. So we always really, really appreciate that.
Well, I think it's important, for buyers that, you got to be careful who you're using, whether it's your lender, your realtor, your home inspector. There's so many people involved in the transaction that play a really critical role. And unfortunately, there's kind of a low barrier of entry to become a loan officer, to become a realtor. Not really other, appraisers are difficult, but, there's certain things that someone doesn't have to have a lot of experience to do. And you might align yourself with the wrong person and either have your loan blow up or have your, not negotiate for the right inspections, if you don't have the right realtor representing you. So it's important to know it's not just an easy snap my fingers, buy a house, everything's fun. There's a lot that goes into it and a lot of things that can go wrong if you're not with the right people.
You mean the reality shows aren't exactly what they seem to be in real estate?
Yeah. No, but they are fun. They're entertaining. That's what.
I listen, my guilty pleasures as well.
They're entertaining, but not really realistic.
Yeah. Well, fantastic. Thank you again, Mike, as always, for your input. And sure we will do this again in the future.
Cool. Thanks, Abby.